Hello, 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 everyone. Happy Thursday. How's everyone doing? Good morning, Patrick. Happy Thursday, Josh. Good morning, Martinez. Good morning, everybody in the background. Let's just get right to it and let all the people filter in. So we had the continuing and initial jobless claims coming in. Initial jobless claims better than expected. Continuing jobless claims slightly higher than forecast, but not bad. PPI coming in much better than expected, but not shocking. Core PPI forecast point 0.2 coming in at point 0.1, year over year coming in at 2.4 versus 2.6 for the core. Month over month for just a headline PPI coming in at point 0.1 versus point 0.2 expected, up from last previous point 0.4. So year over year PPI coming in at point 0.1 versus point 0.4 expected. So overall numbers roughly in line to a little better. Nothing really shocking. We had Pepsi and Delta Airlines earnings. Both are gapping up on strong earnings. And remember, tomorrow kicks off the bank earnings. So that's where we sit right there. Good morning, Jacob. Good morning, Options 22. Good morning from vacation. I hope your vacation is going well, Sterling. Hope everybody's having a wonderful summer. And if you get to take a vacation, I hope it goes well for you. You can see here still strong. Mega caps still strong. Amazon after their Prime days. It'll be interesting to see how the results were for Prime Day. Everything up. Pepsi up to almost 2.3% after their earnings this morning. And where's my... I can't find airlines on here. Oh, well. Well, we'll just... I know Delta was up. I did look at the chart on that also. But... that's where we sit. So strong market, pre-market, everything up. Com services, basic material, technology, consumer cyclical leading the charge higher. There is no fear in this market whatsoever. Little interesting change on the Fed watch still for, what are we, 13 days. We still have the full rate hike of the 25 basis points hiked in, but now the first cut is priced in back to January. So, hike, pause, cut in January. So that was a pretty big shift. Remember, it was out in May, then it shifted to March. Now it's back to January. So it'll be interesting to see how that holds up. Fear and greed, we're still in extreme greed. And there's no fear in this market. Oh, by the way, this was a pretty good one from the Tier 1 Alpha talking about their total absence of put gamma, except for major strike gamma levels at 40, 400, and 4,000. Just suggest fewer betting against the market in the short-term basis. There's nothing on the agenda to show a rollover, especially since we broke above 4,500. We got a lot of call gamma kicking in there. So that's where we sit right now, and roughly the flip to negative is back at 4,450. But that 4,500, as long as that, even on a pullback to that level, it doesn't do any technical damage. Doesn't do any technical damage. But there is very, very, very little fear. I already talked about Delta and PEX. I did not look at Progressive. Tomorrow, though, remember, tomorrow's going to be big. JP Morgan, United Health Group, Citi, Wells Fargo, and BlackRock at the bottom. So that's going to be the big thing. Let's see if that can shift anything else in the market. Rip to the mic with the knowledge. Now hit the like. Rip the mic. Huh. Hey, by the way, people ask for better sound, for me to up the sound volume. Is it better? I've upped it a fair amount on this microphone, so let me know. People were saying it was hard to hear if they were watching on an iPhone. We will take a look at the clear path moves. Where's the short-term top before the all-time tops? We don't have a short-term top yet. Remember, every double, they did not trigger, and then they went to triples, and now they're continuing. What levels am I looking for? Let's just take a look at the bigger picture real quick. There is up against some pretty major resistance. This is a major resistance zone between about 45.50, 45.40, 45.50, and the 87.5. And it's not just that the 87.5 does that key harmonic, but you see selling pressure back in January and February of 22. Selling pressure in March of 22 and April of 22. So there's a lot. This is a toppy zone in here. Is there anything in the short term that has a topping pattern? No. Even see back to this little breakout zone where we had the top in middle of June, the short-term top at the end of June that we broke through yesterday. That is now key support with a rising rotation zone. Even if we're technically to dip to 44.85, it would be fine. That would be just a normal pullback. So next key levels I'm really focusing on, if we get above this 45.30, roughly that 45.50, then 45.75 is a harmonic, and then we start plowing through that 46.21 to 46.45. The only thing that gets me start with technical damages is we start getting a daily close below the rotation zone, which you see last pullback closed in the rotation zone, rotation up, pullback in the rotation zone, rotation up. So the only thing that changes the pattern, at least in the short term, would be a close below the daily rotation zone. But there is there is waning momentum on this 3 push higher. So I will be watching on the shorter term for any toppy patterns. But there's no major. Why isn't that? Come on. Oops, wrong one. But I mean, we have, this is still a potential little mini double, lopsided double because of where this is. But, you know, that only takes us back to 44.71 worst case if that were to trigger. So that just takes it back to the daily rotation zone. That's really about it. So I'll be watching for any weakness. But if we go into a choppy day ahead of bank earnings tomorrow, I'm not even worried if we get choppy to pullback. Yesterday's close is 45.05. So that's even some key support. And we do have a little mini gap, by the way. A little mini gap. NASDAQ just clear this up because we're just bouncing off some of these shorter term harmonics. I had up there a 15,576. But up here, 15,630 and then 15,730 roughly. Key support, 15,368 to about 15,400. No technical damage, even nothing, even if we pull back to the breakout level. I'm just watching. The last time we closed even below the rotation zone was back in May, beginning of May. So there's been no close below the rotation zone, and that was barely. And then we've had the power moves with rotations back up. So that still we got waning momentum. Cycles aren't at the top yet on the daily, though. Going to be watching how that rolls into tomorrow. So those are the key levels there. There's not much to talk about. I mean, honestly. Thank you, Josh. In terms of the bigger pattern on the NASDAQ, there's some advanced clear path up here still to this 15,730 area, and that's the breakdown zone. And then it's 15,982 to complete the 87.5 pattern. The Dow is still getting a fair amount of selling pressure. Put up this 34,725 area. We spiked up to 87.5 again, and this little cluster area, and then reverse back down. I still need a close up above here to get overly bullish on the Dow. The leaders are still the S&P and NASDAQ. Heading higher. The Russell, which breaking out, we hit this key 1965 level, pulling back yesterday. we still have the 1977. I'm watching for more of a pause and the pullback here, but will not be surprised. And that's not the overall major 87.5. This is the 87.5 level from the highs last in January, end of January, beginning of February, to the lows in March. Okay, that's the 87.5 it's targeting. It's not a major one. So that's where it sits there. VIX, again, no fear, retesting this low 13 area again. Look how quickly it dropped. It stayed elevated above 15 for approximately 1 day. Where else do we sit? This is going to probably be done, the sloppy head and shoulders. So the DAX powering again higher. If we close above the 62.5, I'll be watching for a return to 16,445. Look at the big reversal in the. This even shocked me yesterday. It was like, hey, we'll just sell down the yield again on the 10 years. But returning to the major breakdown zone, I'm watching for a pause and then a potential rollover coming in next week. The 10-2s still climbing with the double bottom pattern. The double patterns do hold up really well, even on the 10-2 curves. Dollar index breaking down yesterday below this major support bottom. The 1, 2, 3, 4 bottom low, breaking through there, closing down below, and now pausing right now at this 99.69 harmonic. Below that, I have on the retracement harmonics. Very key level, 98.75. 98.75, close below that. We could see the dollar continuing to retreat then to the 21 spring low area where it formed a major double bottom pattern. So that's what I'm watching. Crude continuing higher. Even if we pause here, any pullback to rotation zone, I'd be watching for another rotation up and tackling that 200. Gold closing just below the first target and pausing there. But if we keep seeing a dollar pullback, we should see gold continue higher through these next two targets. It really needs to get above this 1995, though, on a closing basis to really get a run going in gold. What else? US dollar, Japanese yen trying to get now into this area with a bottoming pattern. So we could be setting up something right here. I know there's a couple people trading the yen. This technically does qualify. It's against the rotation zone. This is a very minor bottoming pattern, but we could just see at least the start of a little bounce move. It's not a major bottoming pattern yet. Euro continuing to plow through, went through this little 111.68 level here. Next level is 112.40. 112.40, if we put on our retracements, the key retracements, right up here, 112.94 is the key level. We try to close above there, especially on a weekly basis. We could see the euro returning to the high area of spring of 21. The pound plowing through, watching 132.77 is the next major target. It was into a clear path, and we have hit the end of this little minor clear path. We go into a choppy area, so I wouldn't be surprised over the next few days to see some pausing action at least before that push up. Bitcoin, still nothing. Let's look at the spiders and the Qs. Spiders and the Qs. Now, the spiders, for those spider traders, there is the technical end of the clear path move is 448.54. So overhead here, there's a fair amount of resistance coming in over the next couple days. We've hit that 75 harmonic, but any pullback to 444 is just to the breakout level. So right now we're trading 447. On any rollover play today, the gap fill would be to 446.02 only, not even close to that 444. So those are the two backwards targets I'd be looking at, 446 and 444. We're above the little minor harmonics right there, and we don't have enough of a pausing bar, but the next target I would use would be 448.54, then 450. Are your targets higher? For the Qs trading 375. Your next level is 376.67, and then roughly 370, 380. Those are your next levels higher. On any pullback, 374.75, and then the gap fill from yesterday, 372.82. And that's roughly in line with the breakout. Sorry, my allergies. Roughly in line with the breakout zone, 372.72 area. So that is very key for the Qs. Again, you can see same patterns. The only thing that's going to adjust me in the short-term basis is a close below any of these rotation zones, which for the Qs is all the way back at 363. So we're a long way off from that. Yeah, US dollar does look extremely oversold, but I would expect down at that 62.5 there'd be more of a pause. By the way, Tesla gap up, so it would be there's some sell after the gap up yesterday. There was a fair amount of selling, did not fill the gap yet. We're going to gap up again today. Jeez. So it would be 272 would be the gap fill play. The Tesla, the only thing I'm watching here would be the close below the daily rotation zone. Now that the double with this, especially this gapping up again, this is still could technically be a double top, but it's getting into very sloppy territory. Gold inverse head and shoulders on a 4-hour daily. Well, we had the double bottom. That's the only thing I'm watching. The double bottom already triggered. If we can, I can go back and look at gold. Inverse head and shoulders. Again, this is the double right here. These two lows, and it was going into a reversal move. It's a little sloppy, but I wouldn't even bother with roughly the targets are going to be the same. They're going to be a little more extended for the inverse head and shoulders, but it's going to still be, if you want to carry it beyond 1985, it's still going to be 1995. So, you're welcome, Heinrich. Is there a monthly triggered inverse head and shoulder on coin? On a monthly basis? Well, the neckline would be like this, and you'd still have to wait to the end of the month. Because the neckline would be like that. So it's confirmed, but we'd have to see where this closes out the month. And I'd need it to close above about 88 on a monthly closing basis. So that's how that would look. Now, if you're trying to figure out if there's a trade there, let's just see what the targets are, because remember, the head to the neckline, roughly where it's breaking. And one of the key targets would be about 119, so 120, just in front of 120. So your targets aren't like to reverse this whole move. That's where your key targets would be. And if you look at that, that's also roughly in line with the spike high from last August. So keep that in mind. But good question there, Sterling. All right. This AI changed everything with the 5.25% of the economy should have fallen to its knees thanks to AI. I think I'm not saying AI is not an important thing and is going away, but I think it's been way overblown, and to monetize it and even the overblown with all the chips there, I think it's just overdone for the time being, but the momentum trade is still up. That's why I'm talking about even on pullbacks, there's no technical damage done just yet. We still do still do have a potential double top in Nvidia, but if it breaks higher, the next major targets are upwards of 457 to 458. So that's where it sit. Hey, Coco, haven't seen you for a while. That's where we sit. Yes, there is still a chance that US dollar will hit 142, or the US dollar Japanese yen. With that, I have to go again. Thank you for tuning in, and I shall talk to everybody for bank earnings. Bank earnings season really kicks off tomorrow, so we'll see how that's going. And we'll talk to everybody on Friday. Bye for now.